Hi, this is Kerry Artad with Wicked Stocks, bringing you your daily Apple report for Wednesday, November 1st, 2023. But before I walk you through the charts, as usual, just want to encourage you to please click like if you haven't already, subscribe to the Wicked Stocks YouTube channel, share the content if you would with friends and colleagues, and check out wickedstocks.com, where we offer a full suite of both daily and weekly analytical videos just like this one. Daily analysis in the SPY and the Triple Q, that is the S&P 500 and NASDAQ 100 ETFs. Weekly analysis in the S&P 500 Index, the NASDAQ 100 Index, the Long Bond ETF, the TLT, as well as 2 individual stock picks a week that you never see on YouTube. That is 8 a month that cater to the 3 to 5 week swing trader out to the 3 to 5 month near-term investor. We're always looking for at least 20% moves on those stock picks, and you can check out all of this for no cost for 5 days. We offer a 5-day free trial up front with a wickedstocks.com subscription. So sign up for wickedstocks.com, check it all out. If you don't like what you see within 5 days, you can cancel your subscription at no cost to you whatsoever. On with the charts. Let's start with the big picture, work our way into the day itself as usual. We've been plodding along this long-term support area for the last month and a half after having closed above it in May, setting off a long-term buy signal that I still think ultimately should yield this 230.13 channel top. The clear accelerator on the way up would be a settlement above 187.38. This is a weekly chart, so I expect this to take a month, possibly more, to reach 187.38. Could be sooner. I'll get to that in a moment. But this is sort of the dynamic midterm, buying the mid 160s, selling the upper 180s. We can fall off from here through the rest of the year back into the mid 160s, fill this wedge out for the next couple of months perhaps, and it would be a settlement above 187.38 that would signal the 230.13 region in a more protracted, accelerated way. This could be within 3 to 5 months of closing above 187.38. Now on the downside, if we were to close this week Friday below 165.57, that needs to be by a 1% margin of 163.91 or lower to set off a sell signal through the rest of the year and into Q1. And under that scenario, I would expect 3 to 5 months bearish continuation into the low 130s. But we are not there. We are bottom picking the mid 150s in anticipation. Well, if you are a 2 to 3 week swing trader, you're bottom picking the mid 160s in anticipation of the mid 170s. This new descending 1/3 speed line that may be in reach over the next few days. I'll get to that in a moment. And, if you're bottom picking the mid 160s, as I mentioned earlier, over the next month or two, you can anticipate the upper 180s, soon to be mid 180s. 186.76 is the daily channel top to what we find on the weekly chart at 187.38. And I will say, just mention now, that if over the next week or so we were to close above 175.27, that should accelerate this 186.76 to within probably 2 to 3 weeks, 3 to 5 at the very most, where once again we can top out through the rest of the year. As for 175.27, will we see it anytime soon? And I'm going to say yes if we close today above 172.66. Now, I came close to calling this a session containment level. I think day traders can play it that way. We could top out here perhaps for the day, but be careful. We just came off of long-term support again. I think the market is wound up for a rally from here to 175.27 between now and the end of next week. And if we were to close today above 172.66, probably tomorrow we test 175.27, where we could top out through next week. So this is kind of a 3 to 5 day, 1 to 2 week swing trade, buying the mid 160s as shown here and selling the mid 170s, 175.27, and dropping daily. We could fall off from here back into the mid 160s within a full week of trade. We could fill this wedge out for the next couple of weeks. And in terms of whether we test 175.27 this week, that would come with a violation of 172.66. Now, we could push through or open above 172.66 on Wednesday and reach 175.27 today, but I think the likelier outcome would be a settlement today above 172.66, indicating 175.27 tomorrow. And as I said a moment ago, closing above 175.27 later in the week, I think indicates a good November low. We should then, within 2 to 3 weeks, push into what is now in the mid 180s, where we could top out well into December activity. And keep in mind that this 180s, upper 180s is considered a 1 to 2 month target anyway, as long as we're above the mid 160s. So, if you're playing the long game, in other words, being long through November, that is the play in the mid 160s, holding out for that 187.38 channel top. And if you haven't been bottom picking, some people don't like to buy weakness. They'd rather buy strength. And for me, strength right now plays out with a settlement above 175.27. And so if you have not been bottom picking the mid 160s, you're buying a settlement above 175.27, then anticipating the 186.76 formation within 2 to 3 weeks. Could take a little longer than that. Holding below 172, well, the 172.66 formation can contain intraday buying, possibly for the day. On the way down, there's not a lot to hang your hat on in terms of solid support. All of these are meaningful levels. It really is, once again, 165.57 to 166.99. We came close again to testing it on Tuesday with the 167.90 low. This area able to absorb selling, for the day traders, for the week, 3 to 5 day swing traders, for the next month or two, 3 to 5 week swing traders, near-term investors, up to 187.38. And once again, if you are looking at buying Apple long-term as an investor, this is the area, because not only expecting 187.38 over the next couple of months, but yes, 230 and climbing by this point next year or sooner. That sooner would come with a settlement above 187.38. Let's talk downside, that if we happen to break, actually what I want to say is if we close below 165.57 today, 162.47 is likely Thursday, Friday. And if we settle the week itself below 165.57 by the 1% margin of 163.91 or lower, we should within a week or two fall to 157.34. And over the next, as I said at the top of this video, 3 to 5 months, continue south into the lower 130s, where we could bottom out well into next year. I'm going to leave it at that for Wednesday's Apple Report. Please click like, share, subscribe, and check out wickedstocks.com. You have a great day.